Hello, Marty Watson. Welcome to
Hello.
Facebook Live at 12:05.
I'm so excited. Thank you for having me.
Thank you. So, everybody, if you do not know who Marty Watson is, Marty, tell the people who you are and what you do.
I am the owner of Potomac Title Group Services. We are a full service title company. We're actually now licensed in all 50 states, although we do focus on the DMV because that's where I live.
Right.
But yeah, we are, I've been doing this for 30 years, so I love what I do and I love to, help the community.
Well, I appreciate what you do, and you have a wealth of experience, which is one of the reasons why I invited you specifically to talk on this topic today. So we are going to talk today about how to buy a home with an assumable loan and what that is and what is involved. So let's kick it off, Marty. Tell us, what is an assumable loan and how exactly does it work?
Okay, so an assumable loan is either an FHA loan or a VA loan, where a seller theoretically can sell, I put that in quotes, their interest rate to a buyer. So in today's market, most buyers, or I'm sorry, most sellers have a low interest rate because of the past couple of years. They have 2.5%, 3%.
Right.
So it's really attractive to buyers who qualify to assume a loan to get that interest rate because they can actually buy more in purchase price if the payment's affordable. Today's interest rates are 8%. So if they went to get a conventional regular loan, they would have to pay more on their monthly payment. But if they are qualified to assume a seller's loan at 2.5%, they can definitely buy more than what they would at 8%.
Yeah, and that 8% interest rate is a tough pill to swallow right now. And regardless of where the mortgage rates are, life happens. People get married, people divorce, people, add kids to the family, and you need more space. So if you are, in a position where you need to sell, you're a must sell seller and you have to sell and buy, you might find yourself in a position where this might be an option for you. So and that I kind of answered my own question. I was going to ask you, Marty, who is an ideal buyer for an assumable loan?
So as I said before, FHA loans and VA loans are the assumable loans. And so the most ideal assumable buyer would be a veteran who assume a veteran loan. Because if a veteran assumes another veteran's loan, then that veteran seller is able to get their entitlement back, where they can go buy another house and use their VA eligibility to buy a house. Right. They have now opened it up where non-veterans can assume VA loans, but in that case, the seller will lose their entitlement and eligibility and will have to wait till that loan is paid off in order to buy a new house.
Well, Marty, I think that's really, really important. So I'm going to pause you and ask you to completely rewind and just say that one more time, simply because we're in a market where we help a lot of veterans. So can you say that again and how the VA assumable loan works?
Yes. So if a seller has a VA loan and they want to sell their property and their interest rate, a veteran can go apply for the loan, or a non-veteran can apply with the seller servicer to assume that interest rate and that loan. If it's a veteran, then they will transfer their entitlement to the new buyer. And so that means the seller maintains their entitlement. They can go buy another house and use their VA eligibility.
Which is huge.
Which is huge. If the seller accepts a non-veteran as their buyer, and that non-veteran qualifies and is able to assume the mortgage, the seller may lose their entitlement. So typically a seller would choose a non-veteran buyer if their circumstances were such that maybe they were moving in with family, or they weren't looking to buy a new house, or they're moving into assisted living or something like that, where they're not going to be in need of their eligibility.
Right, right. And just like any situation with real estate, there's no one size fits all solution. There's always situations where, it's favorable for this type of buyer, this type of seller. So I just want people to be clear on that.
Yes.
And so I recently had a listing where it was an assumable FHA loan. So what kind of buyer would that be good for?
That is just anyone who qualifies. There's not a veteran requirement to assume an FHA loan. Now, I will say that not all servicers, which would be the seller's lender, allow loans to be assumed. So before a seller lists a house, they need to call their servicer, check out what the requirements are, so that they can actually pass that on to a buyer and make it part of their attractive listing.
Yes. And that's one of the things that I've, been doing with my seller clients when we sit down for that listing consultation and strategy is identifying, okay, what type of loan do you have and is it assumable? Because there are buyers out there who are shopping for homes just on that criteria alone.
Yes.
So that's definitely good to know.
Because I mean, they could buy a $500,000 house versus $300,000 based on the interest rate,
Right.
So I understand it.
Absolutely. So one question that a buyer may ask, Marti, I've already been approved with the lender. What does this mean for an assumption?
So a buyer does not have to be pre-approved with another lender in order to assume a seller's mortgage. They just have to qualify with that current servicer.
Mm-hmm.
However, a seller probably will want to see a pre-approval letter from a buyer because they want to make sure before they go through all this process and accept the offer of that buyer, they want to make sure they're well qualified.
Yeah, absolutely. And I can attest to that as a listing agent. Assumable or non-assumable, one of the things that we're still going to look for in the offer is that pre-approval letter, because we want to see that, okay, one, the buyer has invested the time to do the mortgage application, and two, in the event for some reason that the assumption process does not go through, that the buyer can still qualify to buy the house.
Right.
And speaking of that, Marti, how long should a buyer and seller expect this assumption process to take?
Well, as they say, you should never assume anything. So every servicer is different. So we help several people with their assumptions, and we've seen anywhere from 30 days to 90 days.
Mm-hmm.
And however, it's not consistent. So
Okay.
I had an attorney friend of mine who just told me she's doing assumptions taking 6 months.
Wow.
So it really does vary. But if the seller upfront calls their servicer and gets the guidelines, the buyer is responsive on getting their documentation to the servicer during the approval process, it will eliminate, the longer time.
Right. And I think the timing that we're doing this is really good because a lot of times with the seasonality of the market, we see a lot of buyers pull out of the market because they want to just stop and then pick up their search in January. But if you know you're going to buy next year and it makes sense for you to include an assumable loan purchase as part of your strategy, then you may actually want to look now, and you might be cleared for that assumption and cleared for close in January or February, as opposed to waiting to start.
Right.
So one question that a buyer may want to know if they are buying a house with an assumable loan, Marti, is, can I still do a home inspection?
Yes, absolutely. Home inspections and appraisals are still available to buyers. There's no different in that aspect. So if they do a home inspection and, the seller doesn't want to negotiate or whatever, there's a way for them to back out of the contract. It's same with appraisal. The actual lender's servicer will do the appraisal. And if the terms of the contract, state that there's an appraisal contingency, then, there's room for movement there.
Okay, well, I just wanted to make sure we had that clarity because this is a new way of buying homes. And I know people will probably have that question, hey, even though I'm doing this, can I still do a home inspection? Can I still, get an appraisal done?
Yes, absolutely.
So Marti, what advice would you give to a buyer who is, or maybe who has been in the market for a while and they've never considered assumable loans?
I would say that they should consider it because their payment will be lower, based on, depending on what the seller's interest rate is and depending on if they qualify. I mean, they need to look at all of those areas. If you're assuming a VA loan, you have to qualify under VA guidelines.
Right.
You are assuming an FHA loan, you have to qualify under FHA guidelines. So working with your realtor who could possibly give you those guidelines, you can also, look them up. You can call me and I can help you and give you, some advice.
Yeah.
But you just have to be willing to wait because it's not going to be like a regular sale where you can put a settlement date there for 30 days. You don't know how long it's going to take.
You don't know.
But however, I think it's a really great, solution for a lot of buyers who maybe can't afford the house they want at that higher interest rate, which is what's going on right now.
Right. And one thing that I forgot to share with people is let's kind of walk it back a little bit and talk about the costs. So I forgot to share my screen because we want to make it really clear when we are explaining to people how this works. Can you see the screen, Marty?
Yes.
Okay, so this is an example that we put together. So let's say you bought your home 2 years ago and now you have to relocate. So your mortgage interest rate is 2.25% and your mortgage balance, which is how much you owe, is $400,000. Your home is now worth $600,000, which is the current market value. So this homeowner can list the property for sale at $600,000 and the buyer can assume the existing loan, but will be responsible for the $200,000 at closing plus their closing costs.
That's right. And the servicers, which is the seller's lender, typically will not allow the buyer to take out another loan for their down payment.
Right.
Because it does affect their lien or the debt ratio of the buyer or whatever it may be. However, we have seen that if buyers don't have cash, that depending on the seller's circumstances, the seller may be willing to give the buyer financing for that down payment. And we have seen that servicers are allowing seller held financing. However, it is case by case.
Right. It's case by case. And what I can share from experience with my previous listing, I had a seller who had an assumable loan and we put that in the advertising. We ended up getting an offer. We ended up getting 3 offers, but one of the offers was from a buyer who was willing to do the assumption. And with regards to that chunk of money for the difference, they had sold their property and were just looking for a house. So if you are in a property that has significant equity, you may want to talk to your agent, me, about, listing your property and closing and getting that proceeds that will help you be in a financial position to take on an assumable loan.
Exactly. Cash is king.
Cash is king. Cool. Well, thank you so much, Marty. This has been very, very helpful. And I see you have your phone number in the background, but if anyone has a question, what is the best way for them to get in touch with you?
The best way to get a hold of me is Google Potomac Title Group Services. My name is Marti Watson. My cell phone is actually readily available on Google. My email is marti@closewithpotomac.com. Our website is closewithpotomac.com. We would love to help you with any assumptions, help you with any real estate transactions.
Awesome. Marty, thank you so much for being here. And I look forward to seeing you out here in the real estate streets.
Thank you so much, Tamara. I appreciate it.
Thank you. Okay, I'll talk to you soon.
Okay, bye-bye.